Good day, ladies and gentlemen, and welcome to the Q2 FY23 earnings conference call of Sigachi Industries Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you, Mr. Sonpal.
Thank you. Good afternoon, everyone. Very warm welcome to you all. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of Sigachi Industries Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the second quarter and first half of financial year 2020. Before we begin, as always, let me mention a cautionary statement. Some of the statements made in today's Concall may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, let me introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We firstly have with us Mr. Amitraj Sinha, Managing Director and Chief Executive Officer, and Mr. O.S. Reddy, Chief Financial Officer. Without any further delay, I request Mr. Sinha to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj. Very good afternoon, everybody. It's a pleasure to welcome you to the earnings conference call for the second quarter and the first half of financial year 2023. First, let me wish you all a happy Diwali and a new year. In the interest of some of our people who are new to the company, let me first start by giving a brief of the company, after which Mr. O.S. Reddy, our CFO, will brief you on the financial performance for the quarter under review. Sigachi was incorporated in the year 1989, and today we are one of the largest and leading manufacturers of microcrystalline cellulose in the world. Our company manufactures high-quality cellulose-based excipient which predominantly find usage in the pharmaceutical, supplement, and the food industry. The company has created a niche in manufacturing highly innovative pre-formulated excipients and 60-plus wide variety of excipients of international quality standards apart from customized solutions. From our state-of-the-art R&D facility, we ensure continuous innovation to efficiently meet evolving customer demands. We have 2 manufacturing facilities in Gujarat and 2 more in Telangana, from where we ensure supply chain reliability for our customers in India and across the globe. Our total capacities from all these, the 3 facilities add up to 13,800 metric ton per annum, and which we are further enhancing by the ongoing capex. It would subsequently touch 21,000 metric ton per annum. We at Sigachi have a global sales and distribution network and exports to more than 40 countries across Asia, Australia, American continent, Europe, and Middle East. Now I request our CFO to brief you on the financial performance, after which I'll give you the operational highlights of the quarter. Over to you, Mr. O.S. Reddy.
Thank you, Mr. Sinha. Good afternoon, everyone. Let me first brief you on the second quarter financial performance first and then the half-year financials. The operational income for the quarter was rupees 83 crores, an increase of 44.2% year-on-year. EBITDA reported was rupees 16 crores, an increase of approximately 21% year-on-year, and EBITDA margin stood at 19.76%. Net profit after tax reported was rupees 14 crores, an increase of 37.4% year-on-year, while the PAT margin percentage was 16.48%, a slight decline of 82 basis points on a year-on-year basis. Coming to the half-yearly financials, the operational income for H1 FY23 stood at 161 crores, a significant increase of 43.4% compared to H1 FY 2022. Similarly, operating EBITDA stood at 33 crores, seeing a significant increase of 26.8%. EBITDA margins were reported at 20.27% and PAT stood at 26 crores, an increase of 39.7%. PAT margin stood at 16.42 during first half year FY 2022. Now I hand over the call back to Mr. Amitra Sinha to give you the operational highlights.
Thanks, OSR. On the operational front, the revenue growth was primarily driven by increased demand for MCC across all the industries, with volume growth in the range of 8.5% and realization growth in the range of 25% in Q2 FY23 on a year-on-year basis. A decline in EBITDA margins in Q2 FY23 on a year-on basis and Q-on-Q basis was due to higher raw material costs and increase in costs on the new business initiatives of OTC and nutritional, which are in the nascent stage of launch, and hence contribution to the margins are low currently. Export sales has increased by 40% to 113.2 crores in H1 FY23 as compared to 80.8 crores in H1 FY22. Capacity utilization has increased to 94.5% in H1 FY23 as compared to 93.27 in FY22. Company successfully passed on the freight and raw material increase to the customers. Company expects the growth trend to continue with current profitability at sustainable levels. Furthermore, the capacities of around 7,000 metric ton will be added during the later part of FY23, which will contribute to additional revenue growth in the next financial year onwards. Company is constantly striving to improve on its R&D capabilities, cost-effective manufacturing processes, and thereby remain as a manufacturer of choice with highest quality standards. With this, we can now open the floor for question and answer sessions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Yogesh Tiwari from Arihant Capital. Please go ahead.
Good afternoon, sir. Am I audible?
Yes, Yogesh, you are.
Yeah. So my first question is basically regarding the price growth. So it's like we had this 25% this price growth in Q2.
Sorry to interrupt, Mr. Tiwari. Could you please keep your mic far from your mouth and speak?
Is this okay?
Yes, sir. Please proceed.
Yeah. Yeah. So we had this 25% price growth in Q2. So just wanted to understand what would be quantum of price hike you took in Q2 versus Q1, and what would be the expected price trend currently in Q3? Are you looking for any further price increase in this quarter?
Yeah, Mr. Yogesh. This last Q1, the average price was 216.75. This time it is 217.04, slightly increased Q1 to Q2. This is when this 25% when we compare to year-on-year the growth, year-on-year growth in price. That is on account of majorly on account of mix of the grades, and also the increase in price of raw material also impacted that selling price.
In terms of thought process on passing on any further price increase to the customers in Q3, I would indicate that at this moment there are some customers wherein the price increase will happen in Q3. We have given them an indication, but the price increase has not really been effective. So these customers will have a price rise. Other than that, there are no further prices. I'm sure you would believe that currently the prices are, most of the prices are already at its peak. So we don't see further price going up. However, in case there is a significant change in the crude oil or in the raw material prices, we would not really hesitate in passing on the price increase to our customers.
So just to understand, this customers would be from the pharmaceutical segment or from the food segment, wherein the price hike might be?
It's a combination. It depends which ingredient is having what level of price increase on the raw material input, and accordingly it will be passed on, whether it's in the food or in the pharma or in the nutraceutical segment. Our objective is that we are able to camouflage ourselves from the price rise by being transparent to our customers and showing them the change in the raw material prices and giving them a price increase.
And sir, as you mentioned that no, most of the prices have peaked out. So is there any probability of declining prices or maybe taking a price cut in Q3 or Q4?
We don't see that happening, sir, because I'm sure you would understand that there are a lot of volatile international situations prevailing, and we don't see that happening. So I don't see the price being cut down at this moment anyway.
And one more thing, like on the price rise which you will be taking for some clients, so that would be like the quantum would be like in single digits, like 4-5%, something like that, in that range, 4 to 6.
Yeah. It will be in single digits. The input price has not had such an impact that it goes beyond single digits at this moment.
Sure. And in terms of exports, since we have a huge export, I think so more than 40%. So just wanted to understand what is the trend for freight cost. So it's like we had this higher freight cost in the earlier quarters. So how is that looking going ahead?
We have seen that the freight cost has been dropping. Over the last couple of months, we have seen the freight cost come down significantly. We are still observing it because the freight component is again dependent heavily on a lot of international scenarios and the way the goods move. So we are being cautious, but we are keeping this in mind when we review the prices.
And this decline would be like in a strong double digits if I take on a quarter basis.
So actually we haven't seen that because we don't see the freight component increase or decrease as a percentage. We see it as an absolute value and try to gel in our pricing to see what will be our increase. So I would not be able to comment on whether it will be a single digit or a double digit. Because the ocean freight for New York is different, for California is different, LA is different. So it gets very difficult to bring out percentage increase or percentage decrease in the ocean freight. We see it as a value, and then whatever is the incremental decrease or increase, we see if we can factor it into our pricing.
Yes. And do you see any...
Mr. Tiwari, I would request you to rejoin the queue, please. There are many other participants who are waiting for their turn.
Sure, I rejoin the queue. Sure.
Thank you. The next question is from the line of Bhavish Chauhan from IDBI Capital. Please go ahead.
Hi, sir. So my question is from your presentation, slide 6, where you talk about widening our horizon. So when we say that company will venture into human nutritional segment, is it in addition to the 7,000 tons of capacity that we are expanding? Is something separate, and or is it related to our existing business itself?
Yes, Bhavesh, that's a good question. That is in addition to the 7,000 metric tons capacity. Like I indicated in my talk, there are 3 facilities for microcrystalline cellulose, the cellulose-based excipient, and we have 1 facility for premix of nutrition and food. The capacity for this premix of nutrition and food is in the range of 9,000 metric tons per annum. So this nutritional, human nutrition part, this activity or this product comes in from the nutritional facility.
Okay, but are we already manufacturing this, or we have tested the markets and everything?
So we are already manufacturing. The plant is commissioned. We are sampling out to a lot of customers. There is business development already underway.
Okay. So do we see in the next 2 years any meaningful revenue from this division?
Yes, we definitely see a lot of, not a lot of, but a reasonable percentage of our revenue coming in from the food and the nutrition part of our business.
Okay, okay. So thank you. Thanks a lot.
Thank you. Thank you. Thank you.
Thank you. The next question is from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Hello, sir. Last quarter, in quarter one, if I remember, you had given us raw material cost as around $850 as compared to YOY, I guess it was around $650. Can you give me the number, what it is, stands as on quarter two?
Hello, Vignesh?
Hello.
Yeah.
Hello, yeah.
Thank you. Thanks for your question. Yeah, this is around $900, $950. This is different grades are there. On an average, we can take at right now it is $900 plus dollars are there. It is expected to come down little.
Oh, okay. Okay. So, I mean, so it is on a rise. The rise is marginal though, but then it is on a rise, right? So we are not considering the fact that that this has to be passed on as an, or it has already been passed on as in after taking a price hike.
Yes, yes. Already that has been passed on. And now because of this freight charges also are coming down and crude oil prices and some of the raw material costs also are in a declining phase. Just on an average, at present it is around $900. It's there.
Okay, okay. So it has netted off with the lower price of as in. Okay, fine, I got it. So in coming to the nutraceutical business, if I'm not wrong, you have guided around 18 to 20 crores for FY23. Can I get the number, what it is as things stand in H1?
Yeah, right now in recently only that has been started. In second half only we are expected to get some revenues out of it. That is in any very initial stages.
Okay, so but you had guided around 18 to...
Maybe it will be little less also, maybe around
okay,
15
fine.
crores or 12 to 15 crores like that.
Okay, so but as of now in quarter one and quarter two, we have not seen any contribution as such, right?
Only small contribution around less than a crore.
Okay, so okay, fine. And my third question is on cross sodium as an excipient. What is the status of the EC clearance?
So, Vignesh, we have applied for the EC clearance at our Dahej SEZ new SEZ facility, and the EC paperwork is underway.
Okay, any expected timeline for it?
Sir, EC clearance expected timelines, anything what you speak is, we can't be very sure, but I personally expect that things should get on an earlier note, it should get done within 6 months, or if it gets on a delayed note, it might get done within 12 months, sir.
Okay, okay, as another 6 months you mean, right?
Yes. Yeah, another 6 months beyond the first 6 months.
Okay, okay, fair, fine. Fine. That's all from my side. Thank you.
Thanks, Vignesh. Thank you.
Thank you. Before we take the next question, a reminder to all the participants. Anyone who wishes to ask a question may press star and 1 now. The next question is from the line of Sanjeev Kumar Damani from SKD Consulting. Please go ahead.
Am I audible?
Yes, sir.
Yes, yes.
Good news, sir. Congratulations on very fine numbers. Sir, I wanted to know one thing, sir, that all our raw materials are largely imported, if I am correct. Then what effort we are making to make them in India only?
Sanjeev, sir, because this is a forest product, there are a lot of limitations for this product to be made in India. In fact, there have been situations when we have attempted importing it from Indonesian pulp manufacturers, but some of them are not really qualifying the sustainability criteria. Because of that, we don't really find it meaningful to be importing it from them. We have this wherein we import pulp only from the pulp mills which are qualified and certified by the Forest Stewardship Council. So once it is certified by FSC, then it becomes very, very sustainable. And we have been, as a sustainability practice, we have been following this of importing raw material only from these suppliers. And unfortunately, in India, we don't have such concepts still as on date. So they don't really come into the purview of a replacement of an import, sir.
So the direct and agri products is coming to us, or it is also processed by the foreign companies and then we buy it from them? Can I know this?
So, Mr. Sanjeev Kumar, it's of course processed by the pulp mills. It's processed by the pulp mills. There is a level of purity which comes in, and thereafter it is given out to the consumers, people like us.
So we cannot set up a pulp mill to process it. I mean, if at all it is giving any kind of saving and assurance that, we are not dependent to that extent on somebody else.
If I understood you correctly, are you indicating that should we be looking at backward integration?
Yes, exactly.
No. Sir, at this moment, the quantum of capex involved for a pulp mill is thousands of crores, and that's not really scalable, or that's not really possible for our line of activity. So we are not really looking at that option. There are a lot of pulp mills who are giving it at a very competitive price and who have been following sustainability practices. So we are comfortable doing that with doing business with them.
You are also saying that it is available in abundance and there is no likely threat in near future about raw material procurement.
Yeah. It is a sustainable raw material. It is a renewable raw material, and it's of course available in abundance.
One more question, sir. Sir, we export and we import. So naturally, our export are on CIF basis or they are on free on board basis. Then only freight element will be either in our account or it will be plus basis. So that also I want to know, sir, from you.
Yeah, Sanjeev, mostly on CAF basis.
Okay. So we cover up the risk of freight rising or going down. We will benefit. If it rises, then we have to absorb it.
Yes, sir. Anyway, we take it.
The insurance is only for the product, but freight element rises and comes down. Congratulations, sir. Very good set of results you have produced, sir, and all the best for your future endeavor. Thank you.
Thank you,
sir.
The next question is from the line of Manav Vijay from Deep Financial Consultants Private Limited. Please go ahead.
Yes, thank you very much, sir. Sir, first of all, if you can just elaborate on this new capacity that is becoming operational in the next quarter 4. So earlier you had indicated that you will be in a position to fully utilize this capacity in 2 years time frame. So maybe by, let's say, 25 and FY25 end. So does that still stands true?
So at this moment, our focus is to see that the execution of the capex gets done as fast as possible, sir. Once we intend to commence our commissioning activity in the last quarter of the current year, and from the next quarter of the first quarter of the next year, it will start showing us on our sales. Now, in terms of utilizing all this added capacity over 2 years, I still stand by it, but it's very difficult to, give a firm commitment on this, because there are a lot of outside situation, there are a lot of other variables which come in. So in case there is a, change in the market, in case there is ocean freight, the way things were in the last 1 year, it could impact us on our scale. So maybe the 2 years might change to a 3-year period. But on a positive note, I believe that we should be able to absorb a major chunk of the added capacity over the next 2 years.
So, sir, so within the first year, can you do 40 to 50% utilization? Would that be possible?
50% actually is very, very optimistic, sir. Because first year, as we scale up from a 0 to 50, it is tough, but it is doable. It is not that it isn't. However, I would probably put it the first year at maybe a 30 to 40, and the next year as the balance.
Okay, fine. This is helpful, sir. My second question is on the CCS plant. So if I got you correctly, you mentioned that the EC approval is expected to come in next 6 to 12 months. Am I right?
Yes. Yes, Manav, that's right.
Okay. And after that, there is a lead time of 15 to 18 months to get that project up and running.
That's right, sir. That's right.
Okay, perfect. My third question is regarding basically the carriage outward expenses that you disclose separately in your annual report. So, sir, last 6-7 years of annual report suggest that these expenses were used to 3 to 4% of your sales. Now, in FY22, due to higher, let's say all these issues, these expenses jumped to close to 10%. Fair enough. Now, if you can just explain that of the 6%, which basically you incurred additionally in FY22, how much you have been able to pass on to the customer, and how much is what you are incurring on currently from your own resources?
Mostly we could able to pass this additional cost, whatever we are incurring towards freight. We are including in our price, considering this, or even subsequently we are raising a separate debit notes for the increase.
Okay, that means whatever increase that was there has been passed on.
Yes.
Perfect. Fair enough. Yeah. Next question is, sir, in this quarter our tax rate was 11%. Any specific reason, and what is the number that you guide for FY23, sir?
FY23 also, because of this capex we are incurring, and because of this deferred tax asset and liability came in. Because of that, this quarter, second quarter, it has come down. But normally, a picture of the same thing will continue another 4 years, and later on, our SEZ exemption will go lapse. 15 years will be completed, and then an increase of another 5% would be there, 3 to 4% at least.
So, your tax rate for this year would be around what, 18-20%? What that number would be?
Yes, 18 to 20%.
Okay, sir. My next question is, now in this quarter, since you have taken that plant on lease basis, the nutraceutical plant, of I think around 26 to 27 crore. Correct me if my number is wrong. Is correct? Your depreciation expenses have moved from around 80 lakh rupees to around 2.1 crore. Now, going forward, till the time this new plant become operational, at least for H2, 2.1 crore becomes the quarterly number in terms of depreciation.
Yeah, this is there is a lease accounting system is there as per Indian accounting standard.
Correct.
These lease periods in the earlier stages, the expenditure would be on higher side, because all the lease rentals, whatever we paid during the lease period, we have to bring it to NPV, net present values. On that, we have to charge a finance cost or borrowing cost. Because of that, in the initial years, it will be little higher, and going forward, it will come down.
So, sir, on a full, let's say, so what is the time frame for which this plant has been leased to the company?
Mr. Vijay, I would request you to please.
Madam, I just need one number. That's all I'm done.
Okay, sir.
So, what would be the number of years for which this plant has been leased to the company?
Yeah, this is around almost when it is comfortable for the 10 years. It is
10 years time frame.
Right.
Okay, thank you, and all the best,
sir. The company doesn't want to incur capex, and that's why we have chosen this model.
Yes. Point very well taken, sir. Thank you, and all the best.
Thank you.
Thank you.
Thank you, Manav.
The next question is from the line of Ruchita Gadge from iWealth Management LLP. Please go ahead.
Hello, sir. Very good afternoon. Congratulations, sir, on a very good set of numbers. Just had a few questions because I'm slightly new to the company. So would like to understand on your capex. So how much capex you'll be putting for the next 1-2 years, and in which basically products you're putting this capex, and from when it will start it will commercialize basically. If you can just help me with that.
Yes, Ruchita, this right now we are almost 95%. At 95%, we are utilizing our existing capacities. The expanded capacities are expected to be ready by end of this financial year. And as we indicated in the earlier these inquiries, by next 2 years, we'll be achieving around 70 to 80% of the utilization.
Sir, and this is for the MCC, right?
Yeah, MCC, existing MCC, the brownfield
Yes.
expansion at our Dahej and Jagadia facilities.
Okay, there you added.
Yes.
Yes, yes. And the other one is for what exactly?
CCS, cross carbon sodium. That is now EC clearance is expected in 6 to 12 months time, and post that around 1.5 years it will take for the to come into commercial operations.
Okay, okay. And the MCC that will get commercialized in the Q4, will we see some revenue coming, or will that happen in the next financial year only?
Next financial year that will happen.
So this financial year we will not see any revenue from it?
Any revenue. This financial year we are not expecting any revenue.
Okay, okay, okay. And the 25 crore revenue that you were talking about, that was from what source basically?
Can you please repeat?
The 25 crore that you said additionally that will be coming in, I thought that was from this new capacity.
New capacity only. Yes. But okay, this existing MCC expansion is there, as well as our food and Nutra also is there. Other segments are there.
Okay, okay, okay. Understood, understood. Thank you.
Thank you.
Thank you. The next question is from the line of Vinayak Mota from Stallion Asset. Please go ahead.
Yeah, hi. Am I audible?
Yes, please.
Hi, sir. Congrats on a great set of numbers. I just wanted to, understand the way forward for the company. So you're expanding on the MCC front, and then you have your within 2.5 years, you'll have additional capacity on the CSS coming on stream. And you have nutraceuticals being done from the leased plant as well. So could you just give me a way forward as where do you see the company, moving in the next maybe 4 to 5 years if you have some internal roadmap? So what scale are you looking at, and what could be the risks that could come through in that scale up that you're looking forward to?
Yeah. So, Vinayak, in this case, if you see our expansion into cross-carbon sodium, you would see that it's a related diversification, wherein very close diversification, wherein the raw material remains the same, the customer profile, the customers remain the same. Likewise, if you see our portfolio of products, the 60 different products what we have, the specialized, the new ones where we have patents in place, those specialized products are taking in raw materials and processing it, value adding further to our customers. So basically what the products which my customers would buy and process it further, I am doing it myself at my facility here as a co-processed ingredient, and then handing it over to my customer with a value add, and of course at a variable price and with limited competition. So if I see this overall scenario, what I see Sigachi doing is it's gradually moving up the value chain in terms of the product basket, in terms of the value added level which we are kind of adhering to our customers. Going forward, I see ourselves continuing to do this, continuing to move up the value chain ladder and see which way we can service our clients more with our wide variety of products, and with products which are very, very, related.
Understood. And is there any risk of replacement of these products, or they are integral part to, whatever your customers do?
Yeah, so the risk component in this category is extremely low. The reason I say extremely low is because all these products are proven and are the pharmacopoeial products. That means they are new chemical entities which were incorporated many years back, subsequently came into the pharmacopoeial approval list, and then are being used. What we are currently doing is we are working on this approved new chemical entities and developing new particles which benefit the formulator, which benefit the guys who make the tablet, the capsules, the syrup, the ointments. So I don't see, because new chemical entity approval and acceptance by the pharma industry is a very slow process. So I don't see any new chemical coming in, getting approved, and then finally finding its place in pharmacopoeia in a very short span of time. It takes decades sometimes.
Understood. And how big is the market for these products as a whole?
Sir, it's very difficult to quantify. I would say that the cellulose-based products, what we make, that as per market reports indicates that it would be a 1.4 or a 1.5 billion dollar market size by the 2025.
Understood. So one last question. So, is it fair to assume that now going forward as well, you'll be able to maintain your historical 25% growth rate, and given you're moving up the value chain eventually, you will also be able to see an expansion of margins going forward? Maybe it does not come instantly, but over a period of time?
Yes, sir. We do believe that, number one, we will be able to maintain the growth rate, whatever we have, the CAGR, what we have maintained on our top line and bottom line. We would continue to keep that growth rate intact because of our various other ventures or activities, what we are doing in the nutritional segment, in the food segment, in the healthcare segment. So that would, of course, continue to be there. And as we get deeper and deeper into these businesses, we would strengthen back and get better at our margins. I'm sure you would understand that, when you are in a nascent stage, you're just getting started, you have to kind of push through and gain market share. But as you start getting to be among the leaders, you get better and better at commanding a better price and, having a better margin.
Understood. So one small question, lastly, I just wanted to understand, you have, your realizations have gone up quite decently this quarter as well. What are the risks of these realizations to come down, that thereby impacting your top line and bottom line as well?
Realizations could drop in case the rupee strengthens. Realizations could drop in case there is a drastic decrease in the ocean freight, because we sell on CIF. So there are risks involved, but what I overall see is that we are very comfortable or very confident on maintaining our margins, even if realizations drop. The comfort and confidence of maintaining our margins remains intact.
But you maintain margins on an absolute basis or on a margin basis?
On a percentage basis. On an absolute basis is no meaning actually. On a percentage basis. So if I have been higher than 20% EBITDA, I would continue to see that I am at 20 or 21% EBITDA all throughout, irrespective of a decrease in our realization or increase in our realizations.
But the realization will impact the EBITDA number equally. Because if you're maintaining the margin, अगर 100 रुपए का 80 रुपए हुआ तो आपका 20 रुपए से 16 रुपए हो जाएगा ना EBITDA 20% पे, just an assumption.
So then on absolute basis, it would impact.
Yeah. Understood. Perfect. Okay, great. Thank you so much.
Okay. Thank you, Vinayak.
Thank you. The next question is from the line of Sagar Shah from Phillip Capital India Private Limited. Please go ahead.
Good afternoon, sir. My first question was actually you had a volume growth of 8.5% this quarter.
Mr. Shah, we are not able to hear you properly. Can you please come to a quieter place? There is a lot of disturbance from your background.
Yeah, sure. So my first question, I wanted the volume figure for this quarter.
Volume figure for?
This quarter, sir.
Volume figure. So, which volume do you want, sir? Because you want the cellulose-based ingredient volume sales?
Yes, sir.
Okay. CFO, do we have that volume figure upfront?
Yes, sir.
Okay, good.
It will be around 3,600 to 3,800 this quarter, metric tons.
It's 3,600 metric tons.
3,600 to 3,800. Yeah, you mean to say that FY22 second quarter?
No, H1.
Yeah,
H1 FY20. Q2 FY23.
H1, that is 7150. 6,800 metric tons.
600 metric.
6,800
metric.
Yes.
And we are running at 94% capacity utilization, right?
Yes, 94.5%.
Okay. And so can you tell the Q2 FY23 volume figure?
FY23, roughly 14,000 metric tons will cross volume.
The Q2 figure, sir. Q2 volume figure.
Only Q2? You mean to say only Q2?
Yes, sir. Yes.
For 3 months. Okay, that is around 3,500 metric tons.
And for H1, it's 7150, right?
7150 is H1.
No, 6823, no? OSR.
Sorry. Yes, sir. Production. We are talking about production, sir. Production is...
No. We are talking about sales volume, sir.
Okay. Sales is 6823.
Okay. So
normally capacity will be seen on production. That's why I told the production figure. Sales are 6823.
Okay, sure, sir. So my next question was regarding our on realization front. On the realization of BioMagia, we clocked a 25% growth. So can you elaborate on that what kind of sales mix have you done actually to enable high realization on your compared to YOY?
So it's actually, Sagar, it's a combination of product mix, it's a combination of increased freight, and it's a combination of depreciated rupee. It's not one single, it's a combination of all of this that has given us a realization what we see today.
Okay, sure. Okay, now my last question, sir, was regarding to our opportunity in Dubai. On Q1, you said about we are exploring market opportunity in Dubai. So are we still on that? What is progress regarding that?
I'm actually not able to hear you clearly, Sagar. Opportunities in?
Dubai, sir, Dubai.
Yeah, so the Dubai subsidiary has been incorporated, and that's of course incorporated to further our sale in the Middle East and the African region. So that's a work in process at this moment. We don't intend to invest any facilities out there. That's primarily a marketing office to strengthen our sales and deepen our sales in that region. At this moment, the subsidiary is stabilized. We are in the process of hiring the whole team, setting up the systems there.
Okay, sir. Okay, got your point.
Thank you, sir.
Thanks so much.
Thank you. The next question is from the line of Rajesh Jain from NB Investments. Please go ahead.
Good afternoon, sir.
Yes, Mr. Rajesh, good afternoon.
Sir, I had these first two questions with, from some clarification with respect to what is mentioned in the annual report. First is, have we taken the possession of Kurnool land?
Yes, sir. Kurnool land possession has been taken.
How big is that, sir?
That is a 25 acres piece of land.
Okay. So as of now, there is no plan to do anything there.
So right now, we have nothing very concrete. A couple of quarters back, there was a debate on ethanol project, which was subsequently scrapped out. So right now, we are deliberating on what could be the most optimum project which could be taken in aligning the market needs and our competencies. So that is a work in process at this moment.
Okay, fair enough. So the second question is, there is a mention in the annual report that due to economic advantages, the food industry and pharmaceutical industries are increasing demand for non-wood based MCC derived from plant waste or agricultural recycling. Will this affect the demand of MCC?
No, I don't see the demand of MCC being affected. The sourcing of raw material for this product might see a change in case there is market acceptance from the end consumers. End consumers who are the pharmaceutical formulators, in case they see this aligning with their overall purity levels and aligning with their overall tablet properties, they might want to see a substitute raw material being sourced for the cellulose ingredients what they are purchasing from us. But that is a very slow change, sir, I would tell you, because change in the pharmaceutical industry takes many years and acceptance before it actually comes onto the table of the customer or the patient to be had.
Okay. So, but just for information, in case if they accept and they shift from this wood to, the plant waste or the agricultural recycling, can our existing machinery can be used for the same, or do we have to go for a different machinery?
We can the same facility, because the chemistry behind the process remains the same, sir. So the chemistry remains the same, and naturally the equipment which is designed for the chemistry to be executed. So it would remain the same. The parameters would change, the purity levels would change, and consumption of utilities required, water, air, all that would change. But overall, the chemistry wouldn't change.
Okay, fair enough. Sir, my next question is regarding the O&M, that is operation and maintenance of the plant. Currently, I think we are handling 1 or 2 plants. So just wanted to know, 3 years going ahead, how big this segment can become? Is management want to grow this business also, or it is just that as and when you get a proposal or an opportunity, you want to, take that and, maintain the plant?
Yes. So I am actually very bullish on the O&M part of our business, sir. One of the prime reasons is that it doesn't involve a capex. It's a service industry, and in the service industry, I can show my results upfront. The very fact that we have been contracted out by the Aditya Birla Group does indicate that we are executing their plant at their premises with our set of people and technical skills better and more cost effective than what they have been doing all these years, does indicate our competencies in this segment. We are in discussion with a lot of big players because once you qualify in certain segments, certain customers, they want to replicate it at their other plants. So we are in discussion with a reasonable level of players to see which way we could extrapolate this success to other industries with similar products or same industry in their different products.
Okay.
Just to mention to you, sir, the hydrogen hydride plant which was virtually inaugurated by Shri Narendra Modi, was with our O&M. We were privileged to be operating the plant which was finally inaugurated. The chloromethanes of Gujarat Alkalis and the hydrogen hydride plant of Gujarat Alkalis are under O&M contract of Sigachi. And hydrogen hydride is the first plant of the first chemical to be made in India, which goes into rocket fuel. So that's our level of competency, sir.
Okay, sir. Just to get an idea, what is the revenue from this segment during last year, and how much you are expecting, let's say, 3 years down the line?
So, CFO, the last year figure. Do we have the last year figure with us? The breakup of O&M.
Yes. Last year, 13.5 crores we have achieved, and this year, this is, of course, our expectation is around 25 crores, and the growth rate will continue. Maybe in this segment also we can see a good growth in future.
Sir, since OFS or CFO is there, sir, what is the margin we get here, sir, EBITDA margin in this business?
Yeah, more or less the 22% or even 22, 23%.
Sir, maybe 3 years down the line, this can go up to 100 crores plus something?
Yes,
very difficult to quantify, Rajesh, sir. But we are doing the groundwork to see that we capture more and more market and service our customers, sir. Any customer whose operational expenditure is being reduced by taking in Sigachi as an O&M partner, why wouldn't they want that?
Sure. Sir, my last question is, Sir, you have already doing.
Mr. Jain, I would request you to rejoin the queue, please.
Okay,
There are many
thank
other
you.
participants.
Yeah.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to answer questions from all participants, please limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. The next question is from the line of Utkarsh Somaya, an individual investor. Please go ahead.
Thank you for the opportunity. If I heard you correctly, you said you are operating at 94% capacity utilization, right?
Yes.
So from the current capacity, you've been able to do around 70 to 80 crores of quarterly revenue. So is that the optimal revenue we can expect from the current utilization, current capacity?
Yeah, even we are getting even more than that because of this better product mix and specialized products. It will go up at the top line with a growth rate of 20 to 25%. And we maintain the bottom lines, even we can see a growth in bottom line also.
Okay, so just to understand your capacity, so currently it stands at around 14,000 tons?
Yes, 14,000 metric tons.
And after the capacity which is coming in Q4, it should stand at
21,000. Another 7,000 will be added.
Okay, and after that, you will be waiting for the environmental clearance, which should take around 6 to 12 months of the new plant.
No. For this product, no need to wait. We can go ahead. We have got all the permissions after completion. We are talking about the environmental clearances for CCS. That is a different product, cross-carbon sodium. The 7,000, what it is expected to come, the additional capacity, that is existing MCC only in our existing manufacturing facilities.
So on the revenue front, we can expect your revenues to go up by the same proportion as the capacity?
Yes. But the absorption of capacities will take that 7,000, it will take 2 years' time to absorb.
So by FY25, you should be producing 21,000 tons?
Yes, correct.
And until FY25, we can expect the 20% margin profile, right, on the EBITDA, approximately?
Yes.
Yeah. And beyond that, I think you said it will take around FY25, FY26 for the new plant to come, right? If I'm not wrong.
Yes. In this also, we can do some debottlenecking, and then we can increase the capacities further also.
Okay. So when you talk about debottlenecking, that should be around 10-15% debottlenecking, or it can be as high as 50%, just to get an idea.
Yeah, maybe it depends upon the situation. Maybe up to 25% we can see in over a period of time, not immediately. After achieving the full capacity, then we can expand another 25% in the expanded capacities, additional capacities.
Okay. Just one more question. Just to clarify, to understand, at 21,000 tons, the company can approximately do a top line of 450 to 500 crores with a possibility of 25% extra of debottlenecking in case demand is and the environment is feasible. Is that the right understanding?
Yes.
Okay. Thank you and best of luck.
Thank you.
Thank you.
Thank you, Utkarsh.
There is a follow-up question from the line of Yogesh Tiwari from Arihant Capital. Please go ahead.
Thank you, sir, for the follow-up. I just wanted to understand on the CCS segment. So, for example, if our operating margins are about 20%, what would be we understand it is a high margin product. So what would be the margins on this new product, CCS? And how is the competitive landscape? Like, what is the total market for this product? How many players are there? And what would be the capacity we'll be looking for?
So for the cross-carbon sodium, it's more of a complicated product because there is a further more of chemistry involved. So there are limited players in this segment. And when we look at the competitive landscape and their margin profiles, we see that their margin profiles are in the range of 25% EBITDA to 30% EBITDA. So what I believe is that we should be able to match up to the competitive profile and definitely be around that place. In terms of market size, as per futuremarketinsights.com, the cross-carbamylose sodium has a market size of $900 million in the current space. By the time we commission, it should be in the range of $1.1 billion by FY24.
And how many players approximately, like limited? So it will be like 4-5 players only in this market.
Yes, 4-5. That's it.
And the end users would be like again the pharmaceutical players, or what would be the clientele like?
So it is the pharmaceutical players. It basically goes as a disintegrant in solid oral dosage forms. So it goes in primarily into tablet or into capsules, and it goes in as a disintegrant. The functional need of this product is as a disintegrant. Basically helps the tablet break up at appropriate time at an appropriate rate inside the body.
Sure. And what would be like the capacity which we'll be looking at to build up in this?
Yeah, we are looking at a capacity of 1,800 metric ton per annum, sir.
So at 1,800 metric ton, what would be the market share like in terms of installed capacity in this segment?
That might be a very difficult question to say at this moment, sir. We will probably have to do some homework. I believe we have done it before we conceptualize the idea, but I don't have that figure upfront, sir.
Okay, sure. Thank you for answering the question. Thank you.
Thank you, Yogesh.
Thank you.
Thank you.
There is a follow-up question from the line of Vinayak Mota from Stallion Asset Management. Please go ahead.
Yeah, so just one question. The product that you were talking about previously was on the OTC side, right? If I missed it. The disintegrant that you were talking about?
No, the disintegrant, Mr. Vinayak, is a pharmaceutical excipient, inactive ingredient. That's a pharmaceutical product, and that aligns with our current product mix. I mean, it's a very close diversification.
Understood. And just on the nutraceutical factory that you've taken on these, what is the total revenue that you can clock there at full capacity? And by when can that happen, approx?
So in the nutraceutical segment, we are at a very early stage at this moment. We are getting the facility approved and by the various regulatory bodies. And plus of course by the customers. And we are having a groundwork for business development activities going on. At this moment, it will be very early to indicate anything specific. Probably maybe in another quarter or maybe by the end of this current financial year, we should be able to have more clarity, because we would have had reasonable level of revenues come in, and we would have a strong indication on which way we can kind of add on to the values of our customers and pitch them more other products.
Okay. So we have basically three things going on for us right now. Nutraceuticals, the new plant that will eventually you'll get EC and then eventually commercialization, and the brownfield expansion, right? These are the three things that are going on for the company as of now. Any other thing that I'm missing?
We are having brownfield expansion of our core products, sir. We have paperwork and activities going on for the greenfield expansion of cross-carbamylose sodium, which is a related diversification. We have a nutritional facility, the premix facility of 9,000 metric ton, which is in place, and the groundwork to have that facility approved and the subsequent product approved in place. That's at an infancy stage. Likewise, our healthcare segment has been launched, and we are kind of working on the distribution system and the setup for marketing these healthcare products. In fact, over the last month and a half, we have had a good level of advertisements going into the local newspapers in the north and the eastern India on our two OTC products. It has also been coming out in the television channels. So we are aggressively taking this, strengthening our distribution system and our the management and the sales team around them, to see that once the system is in place, putting in products would just be a matter of kind of penetrating deeper into the market.
Understood. And the 9,000 metric ton is for, I did not get that.
So that's a premix facility which has been taken on a 10-year lease. So at this moment, we are doing certain level of food sales, and we are doing the groundwork for the nutritional premix sales as well.
Understood. Okay, great. Thank
Okay,
you.
Mr. Vinayak. Thank you.
Okay, thank you, Vinayak.
Thank you. Ladies and gentlemen, this will be the last question, which is from the line of Rajesh Jain from NB Investments. Please go ahead.
Thanks for the opportunity. Sir, I had two questions only. One, we are entering into the nutraceuticals, then the OTC counter, and then CCS also. Is there any thinking in the management to go for any acquisition in these fields?
Sir, positive thoughts are always there, God willing, and by the support of investors and, of course, the Sigachi team, we will do things, but it will be very early to look at anything. If there is anything concrete, we will definitely bring it out, sir.
Okay, fair enough. Sir, my last question is regarding the capacity. Sir, when you say capacity of CCS is around 14,000, we can utilize 100% capacity of that?
Just to amend your statement, sir, capacity of CCS is a greenfield project, and it will be 1,800 metric tons per annum.
No, sorry. What I meant to say is the MCC, sorry.
Yes. So, utilizing 100% capacity is something like being a perfect condition. And perfect conditions, as we know, never happen. So I would say when we are above 90%, we already start doing the groundwork to see where is it that we can debottleneck. And we work on debottlenecking all the, the bottlenecks of the specific equipment, and see that we kind of increase a 5-7% by just debottlenecking one step. And then gradually the capacity increases by a bit more. I would say that if somebody has to operate at 100% capacity utilization, it would be very, very, very tough. So I think at 90% itself, we start fine-tuning and seeing where we can pull in additional capacities.
And this debottlenecking, you can do up to maybe 20% or 25% maximum, right?
Yeah. In the same civil space, it is only on certain equipments that you can play around. So 20-25% is kind of the upper limit.
Okay. Sir, my last question is, how is the demand for MCC? Because we are hearing a lot of recession talk in US and Europe. So are you seeing any drop or slowdown for the demand of MCC in the outside India markets?
No, not at all, Mr. Rajesh. I would tell you that the pharmaceutical industry technically is recession proof. Because these becomes ingredients which are everybody. So we had historically also in the 2008 crisis, we had not really seen a drop. There were other challenges, but it was not really a drop in the demand. So I don't see a drop in the demand coming in for this particular product.
Nice to know that, sir. Wish you all the Sigachi team very happy Diwali and happy New Year. Thanks a lot, sir.
Thank you very much, Mr. Rajesh. Happy Diwali to you too.
Thank you. As that was the last question for today, I would now like to hand the conference over to the management from Sigachi Industries Limited for closing comments.
Thank you all for participating in this earnings call. I hope we were able to answer your questions satisfactorily and at some time offer insights into our business. If you have any further questions or would like to know more about the company, please reach out to our investment relations managers at Valorum Advisors. Thank you. Stay safe and stay healthy. Thank you.
Thank you. On behalf of Sigachi Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.